What's going on? Welcome back to the channel. So today we're going to talk to you about Roku. Last week they did drop their earnings. I want to go over the absolute key highlights from the earnings that you need to take away. Aside from that, look at some of the support and resistance points and what analysts are saying. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So Friday did close at $99, up 14%. Did have a new 52-week high of $104.96. So getting above that psychological $100 range. Looking at their actual earnings, though, they did beat on earnings per share as well as revenue by 52.18 million. So I'm going to go over the future guidance near the end of the video, but even looking at the implied move, it was roughly 12.51%. So it did come in a little bit more volatile than the anticipated, but then again, I think at the same time, there was a lot of good high expectations for it. So even the 2 weeks, 1 week, 3 days, and 1 day all green leading into their earnings. So I think that's kind of a good thing. Shorts, on the other hand, didn't really do all that much. They returned a small amount leading into their earnings, possibly insinuating that they felt that it might be going up. Even pre-market, the time of doing this video, which is on February the 18th, shorts are returning roughly around 13,000 shares pre-market. Of course, Roku I don't see being a squeeze play, so just to get that out, but 6.42% of the free float is being shorted. Works out to be 8.2 million shares overall are being shorted. Options from Friday, you do see a consensus for the bulls for it to be roughly around that $105 to $110 range. So pretty good stuff for that. Bears are anticipating for it to be sub roughly around that $92 to $90 range. So definitely polar opposites as far as that. With it right now at $99.68 pre-market, it is trading between this R2 and this R1. So $94.83 will be the next strong support. I don't see that being touched, at least for the foreseeable future, unless something on a macro standpoint does change. Flip side, 106 is going to be that next strong target / resistance. Aside from that, looking at the analyst rating, so you did have one just come out today. It was a $75 sell. Morgan Stanley, Benjamin, who has a 61% success rating, so that is rather odd because, yeah, that was kind of out of the blue. But you do also have one bearish one as well that did come from their earnings. That was a $58 sell. That was Michael, who has a 62% success rating. Aside from that, everything else was fairly optimistic. So 125, 115, 129. So pretty good stuff. As a consensus, $102.38 is that average price target, and that does represent a 3.34% upside. So let me know your thoughts on Roku. Give yourself a shout out if you have been buying, if you've been selling, what have you been doing? And then one final thing, if you do want this alongside analyst forecast, ownership, everything, all this information to be completely free, sign up for 𝗖𝗢𝗡𝗘𝗖𝗧. Highly recommend it. It has a lot of good information, and like I said, free is good. So link in the description below and also the comments. But with that said, let's get right to the future guidance.
Roku projects 16% Q1 2025 platform revenue growth amid strong ad demand. Earnings call insights Roku Q4 2024. Management View. CEO Anthony Wood highlighted the strong Q4 performance, driven by the company's platform revenue strategy. Wood emphasized three key pillars: leveraging the home screen as a core asset, expanding third-party ad demand partnerships, and focusing on subscription revenue growth through more resources and home screen integrations. Advertising revenue saw notable strength, even excluding political ads. The introduction of unique ad units, such as the home screen's video marquee ad, contributed to the quarter's success. CFO Dan Jedda noted platform revenue grew 25% year-over-year in Q4, with 19% growth excluding political contributions. He provided guidance for 16% platform revenue growth in Q1 2025 and 12% growth for full year 2025, excluding political impacts. Mustafa Ozgen, president of Devices, shared that Roku OS continued its dominance as the top-selling TV OS in the US for 6 consecutive years, with Roku TVs surpassing the next two competing operating systems combined in unit sales. Outlook. For Q1 2025, Roku projects platform revenue growth of 16% year-over-year, with advertising activities expected to grow faster than streaming services distribution. Full year 2025 platform revenue is expected to grow 12%, or 15% excluding political impacts, reflecting an acceleration compared to 2024 growth rates. 𝗪𝗓 highlighted an adjusted EBITDA margin improvement of 130 basis points year over year for 2025, with free cash flow anticipated to exceed adjusted EBITDA. Financial results. Platform revenue in Q4 2024 increased by 25% year over year, boosted by advertising and subscription revenues. Excluding political contributions, platform revenue grew 19%. Adjusted EBITDA guidance for 2025 reflects a $350 million target, with free cash flow expected to outpace EBITDA due to improved working capital and capital expenditure management. Device revenue was impacted by aggressive holiday discounting, leading to excess inventory that will carry over into Q1 2025. For the full year 2025, device gross profit is expected to be flat compared to 2024. Q&A. 𝗖𝗢𝗡𝗖𝗧 inquired about free cash flow trends and growth sustainability in 2025. CFO 𝗪𝗓 confirmed free cash flow exceeded $200 million in 2024 and is expected to grow faster than adjusted EBITDA in 2025. Michael Morris, Guggenheim, asked about drivers of Q1 platform revenue growth and the impact of Walmart's VIZIO acquisition. 𝗪𝗓 highlighted strong contributions from advertising and subscriptions, while CEO Wood expressed confidence in Roku's ability to continue growing streaming households. Despite Walmart's acquisition, Laura Martin, Needham, questioned the subscription business's growth trajectory. CEO Wood emphasized increased focus and resource allocation, including new premium partnerships like Max, as drivers for subscription growth. Stephen Call, Wells Fargo, raised concerns about industry shifts toward ad-supported tiers and SSD revenue. CFO 𝗪𝗓 explained that Roku's monetization adapts to partner pricing strategies and ensures alignment with partner success. Sentiment analysis. Analysts expressed cautious optimism, with questions focusing on sustainability of growth and potential headwinds in advertising and subscriptions. Concerns included political revenue variability and device segment profitability. Management conveyed confidence in their strategy, emphasizing operational discipline and opportunities in advertising and subscriptions. Phrases such as, "We are confident and we feel very good," reflected a positive tone. Compared to Q3, management's tone showed increased confidence in platform revenue growth and international expansion, while analysts maintained a slightly skeptical stance on device margins and M&E vertical challenges. Quarter-over-quarter comparison. Q4 2024 platform revenue growth of 25% marked an improvement from the 15% growth in Q3 2024. Excluding political impacts, the growth rate was 19% in Q4 versus 15% in Q3. Confidence in platform revenue growth improved, with management projecting higher year-over-year growth rates in 2025 compared to 2024. Analysts' questions shifted from broader platform strategy in Q3 to specific revenue drivers and potential risks in Q4. Reflecting an increased focus on execution, management's focus on leveraging the home screen and expanding third-party partnerships remained consistent, with additional emphasis on subscription growth in Q4. Risks and concerns. Political advertising revenue remains unpredictable, creating variability in short-term results. Device segment profitability faced challenges due to holiday discounting and excess inventory, which could pressure margins in Q1 2025. The M&E vertical continues to underperform, though management has diversified revenue streams to mitigate its impact. Concerns over Walmart's acquisition of VIZIO, potentially disrupting retail distribution, were addressed, with management asserting confidence in maintaining shelf space and brand strength. Final takeaway. Roku delivered strong Q4 results, with platform revenue growth driven by advertising and subscriptions, alongside robust guidance for Q1 and full year 2025. Management expressed confidence in sustaining growth through home screen innovations, third-party partnerships, and international expansion. While risks remain in political revenue volatility and device margins, the company appears well-positioned to continue its upward trajectory in platform monetization and household penetration.